Welcome to Buy, Hold, Sell. My name's Matthew Kidman, and today I'm joined by Michael Wayne from Medallion and Ben Rundle from NAOS, and we're talking about those great companies that deliver better than forecast profits. Start with you, Ben. JB Hi-Fi, always early in the season.
Yep.
Everyone was pessimistic. Wasn't too bad. Buy, hold or sell?
Yeah, not a bad result. I think it's still a sell. Good result in a pretty tough environment, but I think their outlook looking forward probably isn't as good as what it has been. So I think you sell.
Okay. Retail's finished, isn't it, Michael?
It's the old conundrum. Best house in the worst street, I think, with JB Hi-Fi. Looks attractive on traditional multiples, 11 times earnings, 6% dividend yield, but I think the outlook remains challenging, so sell for that one.
All right. We thought there hadn't been a stick of furniture sold in the last 6 months, given the housing downturn. Scali came out with a pretty good result.
Yep.
Same store sales flat, but earnings growth. Buy, hold or sell?
Sell on this one. I think they were expanding at the wrong point in the cycle towards the peak. If you're listening in on the conference call with management, they suggested that there's a bit of weakness to come. They're going to look to protect the volumes and not sacrifice prices. Also, vice versa, looking to protect prices and not sacrifice volume. And I think that implies that they're expecting some weakness ahead.
They've been great retailers, and they are going to start cycling some pretty soft numbers soon.
Yep.
So, Scali, buy, hold or sell?
I think it's a buy. They're adding 10% to their store earnings, their total store base for the entire year this year, and they get about a 3 to 4 month payback. The return on equity for Scali is about 50%. It's an exceptionally high quality retail business, and I think the consensus call of being negative Scali because of the housing cycle is wrong, and I think they're doing the right thing by expanding to take advantage of the next upturn, so it's a buy for me.
All right, let's get over to industrial services. Service stream, NBN, utilities. It's beaten every 6 months for the last 10 years, it seems like. Buy, hold or sell?
It's been fantastic. It's a hold for me. Really like the business and really like management. I just think it's done a little bit too much for now, and 15, 16 times PE, whatever it's on, I think it's a little bit high for a contracting business, but I think the acquisition was good. I just think it's a little bit expensive, so hold.
It's been riding the NBN spend binge, and probably better than anyone else. Service stream, buy, hold or sell?
It's a hold, purely because that NBN tailwind, I think, will eventually fizzle out. A very high quality business delivered consistently through acquisition, but also growing organically, winning new contracts. But I just think that big tailwind that's been there for the business will start to dissipate.
Okay, I know it's early in the reporting season, most of it's to come, but is there one that's already put down its numbers and you said, wow, I've got to have a piece of that?
Yeah, Idp Education, it's a business that we've liked for some time. It's actually an old spin-off from Seek. Essentially, it's involved in education, the 4th biggest sector in Australia. Essentially, they're involved in student placements as well as English language testing services. So if you think about the emerging middle classes throughout Asia looking to go to established Western universities, IDP essentially facilitates this, and they've done extremely well in placing people from Japan and India into universities throughout Canada, Australia, the UK, and it's been a very good growth driver.
Okay, Ben, are you going to stand in front of one of these ones and tell us what might outperform and you want to get on board?
Yep, so one that hasn't reported yet, CML Group. It's a little micro cap, capped at around $100 million. They do invoice factoring, invoice discounting, so helping SMEs with their cash flow finance. They've upgraded about 3 times in the last 12 months, and the stock price hasn't really done much. I think the catalyst for this stock is a new financing arrangement whereby they can grow the book as well as grow their margin too. So it's on about 10 times earnings. I think there's very little downside, and I think it will report well.
The companies might be beating, but these guys, they are tough judges.